Welcome to Kopi Time, a podcast series on markets and economies from DBS Group Research. I'm Temur Beg, Chief Economist, welcoming you to our 116th episode. Today's discussion is about tech's role in payments and investment. To do that, we have with us Caeser Sengupta, who as Google's VP and GM of Payments and the Next Billion Users initiative led Google Pay, which went from 0 to 200 plus million users in the span of just 5 years. Caeser is presently the CEO and co-founder of Arta Finance, which equips professionals with their own digital family office. Arta is available in the US for accredited investors, with other countries like Singapore coming soon. Caeser, welcome to Kopi Time.
Thank you so much, Timur. Happy to be here.
Great to have you, Caeser. Lots to talk about both the payments and the investment space, but first, the payment side. Digital payments are not new. Telegraphs were used to do payments and as payment instructions, and particularly way back in the late 1800s. Central banks and commercial banks have been transacting with each other, making and settling payments since the 1960s. So what's new about payments in the past 2 decades, and why is it profoundly transformational, which I'm sure you believe it is?
Yeah, I think payments is the foundation of everything that finance works on. And you're absolutely right that digital payments have been around, but for a while, but the primary form of usage of digital for payments was primarily for large payments, right? Wire transfers, transfers across countries, bank-to-bank transfers. Most enterprise payments today, at least sophisticated companies, are not exchanging, checks anymore. US still has a lot of checks, but globally, I think that's all been digitized. But there is one very big category of payments that has not been digitized, which is regular people using cash, right? And many parts of the world, people are still using cash or checks. Sadly, even in Singapore, where we have such high penetration of digital payments, we still write checks every so often, right? We still have our checkbooks, and I have my DBS checkbooks that every month I'll scratch stuff out on. So the space of consumer payments, and particularly for small payments and cash, has been the one that has seen the most amount of transformation in the last couple of decades. And if you look at 2 countries where this transformation has been most profound, I mean, this has brought about incredible opportunities for particularly the individuals, the small vendors, and the overall economy at large. These 2 countries are China and India. So China was the first to adopt digital payments driven primarily by WeChat and Alipay. And today, it's inconceivable in China to think about paying out with cash in most places.
Oh, yes.
Wherever you go, whatever scale, you can just use QR codes and do that. India was pretty much a cash country till 2017, 2018, right? And the government had done demonetization to try to drive adoption of digital payments, but it only had a short transitory effect. But the introduction of this new standard called the Unified Payment Interface, or UPI, and then Google Pay, as well as other players like PhonePe, coming on, building products on top of that, transformed the economy. And in a short span from 2018 till today, 4 or 5 years is not a very long time in human history. Today, if you walk around in India, you will see beggars with QR codes and small merchants, and people are paying their gardeners and the security. And the scale of payments is profound, right? I'd often do this quiz with people on just guess how much in US dollar annual equivalents just goes through a product like Google Pay on average. I don't know the latest numbers, but I remember the numbers that were there a couple of years back, and a lot of these numbers are public. But most people guess, it's like $1 billion, $2 billion, $3 billion. No, it's getting close to $1 trillion
right.
in US dollars, annualized payments. And that's just on one platform, right? PhonePe is about the same size. There are a few other players. So the scale of almost 30 to 40% of India's GDP now is moving through this platform, which goes through this. And there are 3 things that are really profound in what made this happen, right? First is mobile. This would not be possible unless everybody was carrying a device that was in their pockets that could be used to pay. Second was real-time payments. And this is where I think the Indian government, NPCI, and the banks played a massive role. They enabled this UPI infrastructure that allows money to move bank to bank. Singapore has a similar structure called FAST. Right? And these have been profound in helping money move across. But the third thing that the Indian planners and the government and the banks got right was small payments. Small payments are critical in moving people away from cash, right? When you're paying your vegetable seller or your gardener, you're paying in 10 rupees, 20 rupees, 30 rupees. And being able to do these at essentially free pricing and then maybe having pricing once you get to a higher level was transformative in terms of getting the shift to happen. So long answer, but as you can see, it's been
absolutely
a huge change in these markets.
Absolutely intriguing. Let me just ask you a couple of follow-up questions. So one is that the balance between making payments ubiquitous, easy to do, against ID theft and scamming or fraud or theft outright. Who's doing a better job in this when you look around the world? Because regulators in India may have a different approach than the regulators in China or the ones in Brazil. What's your sense?
So I think the world and payments have sort of been split into three parts. I'm going to leave China aside for a second because China is a very different market. Correct. With a couple of big platforms that are not just payment but tie everything into your life together. The other two sort of regimes in the world are the credit card world, which is US, Europe, part of Singapore, and largely India, Brazil, and this is sort of what I would call the bank-to-bank payment world, right? And this is real-time payments. And the regimes have evolved differently in terms of security and identity. Mm-hmm. The credit card world actually kind of assumes that there's going to be some amount of fraud. That some amount is going to get used, will go through wrong places. And so the way they have approached it is you can call your credit card company, your bank, and you're protected against. The responsibility sits on the bank to sort of ensure that their credit card users are adequately protected, right? So you have two-factor and things like that. And that's worked pretty well. And over the years, the industry sort of done a lot of work led by Visa, MasterCard to sort of create a risk-free system. Well, not risk-free, but a risk-managed system.
Right.
The second part, India, Brazil, these countries don't have, didn't traditionally have a risk infrastructure where you could do credit ratings and things like that. So they evolved national identities. So India has a system called Aadhaar. In Singapore, actually, we have very strong identity tied to FAST. All bank accounts are tied to our IC numbers. Brazil has a similar system called PIX. And what these systems did was they allowed the government to create sort of a layer of security that's based on digital identity provided by the government by the overall infrastructure. So in India, for example, by account of having an Aadhaar card or an ID number, you can immediately open a bank account.
Right.
You don't need anything else. Now, your bank account then gets tied to your Aadhaar ID. So that helps mitigate fraud and risk quite a bit. So I think those are the two regimes that have evolved. Singapore is interesting. We sort of have a bit of the credit card world and a bit of the cash digital payments world. And it'll be interesting to see how the rest of the world evolves.
Right. So Caeser, when I used to travel to Japan 15, 20 years ago, I thought that was the future hub for all the innovation in digital payment. They had like 3G, 4G phones before everybody else. NTT Docomo seemed to be like in the forefront of innovation, and they sort of lost their way. And then we saw a huge amount of innovation happening in China, and then like the likes of India, where there was a lot of sort of ground-up development. So what explains success of certain economies and countries and ecosystems and not that much success in other places?
That's a great question. This is something that we thought about a lot when we were at Google. Like, what is the key difference between a system like UPI really flourishing or a system like PIX flourishing versus, to an extent, even Singapore, where FAST is used, but nothing close to what UPI and these have happened. And I think it comes down to, in my opinion, I'm not an expert, you're an economist, My view is it's about interoperability and open systems. So Japan, in a way, is a classic example of this. They were an early adopter of many technologies, but they kind of went on their own evolutionary branch in history, right? So if you see the tap and pay in Japan for transit works faster than most other countries. It's called Suica, but it's a different standard. Nowhere else in the world uses that standard. So in a way, the risk of being an early adopter was they kind of went off a little bit on their own branch, right? And that then doesn't benefit from the scale economies. On the other hand, once you get to standards, and this is why from a Google perspective, when I was there, we pushed very hard for open standards that were interoperable across banks, across other players, because then the entire ecosystem is pushing. Today in India, for example, or I'm not super familiar with the latest in Brazil, but that's how a couple of years back when I was still enrolled, it was set up. When you have one particular payment app, you can make a payment using somebody else's QR code, right? That instantly creates a much bigger ecosystem. And these are public goods, in my view, right? So these can't be designed in a way where it only works one bank to one bank, right? They have to work where when you use your credit card, you don't think about like, oh, is my DBS credit card going to work? What machine does the other person have on the other side, right? Is it some other banks? You know it's going to work. And that's what the ecosystem around Visa and MasterCard and Amex have sort of created. The same system needs to be created for this sort of digital payments world, right? Where it's open and interoperable. So I think that was one of the key things. Like one element of like India that worked very well is this thing called the Bharat QR, right? That was a standard that was set by the government, and as anyone could acquire a merchant, and now any user with any payment app could use that. So I think that interoperability is super, super interesting. I mean, Singapore went a little bit in that direction with SGQR, but I think the implementation is terrible and wasn't as easy and seamless as the Indian system was.
Right. You wanted to put China aside earlier a little bit, so I want to talk a little bit about China now. So when I look at Elon Musk's ambition with X, it seems like he wants to have the sort of broad ecosystem that embeds social media and shopping and payment, everything within one app. It hasn't really taken off anywhere else other than China. What's the story there?
That's actually not quite correct. In India, Google Pay, and I would say one of our main competitors, PhonePe, both have built that. So today in India,
super app.
It's a super app. And they evolved in a different direction from the Chinese products. Chinese products typically started as chat apps first.
Correct.
That was WeChat. Yeah. Alipay was more of a traditional approach, but WeChat started as a chat product and then added payments, right? And maybe Twitter will go in that direction. Google Pay started as a payments app, primarily facilitating peer-to-peer payments, and then enabled merchants. Today on Google Pay, you can get a loan. You can put savings stuff in. You can buy air tickets. You can order pizza. You can order flowers. Like everything is on it, right? There's a whole architecture of micro apps that in ways are similar to the WeChat experience that enables you to do a variety of things on the product. You can even chat on the product. I mean, when I was there, it was quite surprising. We saw, it was one of Google's most used chat apps. It had nothing to do with chat, but it would be like, a vegetable seller would quote you a price and you would negotiate on that and then you would make the payment.
Right.
And rather than doing it across different products, going and doing it in this was a more natural use case. So I'm interested in seeing where Elon takes Twitter. Elon's one of the smartest, most innovative product builders in the world, but it remains to be seen whether you can take a social network app and transition it to a payments app in most markets.
Right.
Because what people's expectations are very different. And I think payment apps, like even when we built Google Pay, we built it separate from all of other Google products because it had to convey a certain level of security, a certain level of reassurance. Google Pay had a phone number anybody could call if they had an issue, because when you're dealing with payments, it's not the same as any consumer product. It's not like putting your photos or sharing your...
It's a much greater sense of urgency.
Much greater sense of urgency. The reliance, the confidence has to be very different, right? So it's somewhere between those two. So it'll be interesting to see.
Okay, and what about sort of Meta, WhatsApp environment? I mean, how come we're not seeing more payment and again like a Chinese style super app?
So that's probably a great question, right? WhatsApp launched UPI payments, but hasn't had an impact in India at all, right? And I don't know why. There are lots of hypotheses. One of the hypotheses that people think of chat apps in a different part of their brain as a lightweight thing versus payment apps where there's a lot more sense of reliability and reassurance.
Right. Okay, so you have alluded to your experience in Google several times, so let's talk about that. How did you get into the world of digital payments?
It was actually, in a way, very fortuitous. So I had been Google for 7-8 years. My boss then, who's the CEO, Sundar Pichai, he had just taken over as CEO. And one of the things that he was worried about was that Google wasn't investing enough in sort of the new trends coming out of the younger users and newer users of the internet. And a lot of these users, we were starting to see huge adoption of Google products and services, Android search, maps, YouTube, from countries like India, Indonesia, Brazil, Nigeria, even China. And he wanted to have a very specific focused effort on that. My family and I wanted to move back to Singapore for a while, so he put 2 and 2 together and he said, why don't you move back to Singapore and start the next billion users effort? And part of it is, I want you to help make all of Google's products better, And so think about what you would do to sort of make these products work better for these next billion users. But also, you have a charter to create new products. And so in the former, we did a bunch of stuff like YouTube offline, Google Maps offline, great partnerships with those teams, Android One, with the Android team. But when we looked deeper into the new opportunities, it was very clear to us that digital payments and being able to play a role in enabling that at a scale would be transformative.
So Caeser, which year was this?
This was 2015.
Okay.
2015. So 2015, we started looking into it. We could see what was happening in China. China was sort of midway through the transition to digital payments. And so as we started looking around the region, we realized that in the Indian government, and particularly some parts of the Indian government, like the National Payments Corporation of India, NPCI, which is a quasi-government body, there was a very great partner who really wanted to see something like this happen. And so we started working together with them, with some of the largest banks in India, all the top 4 banks, HDFC, Axis, ICICI, State Bank of India. And together we said, look, we can pool our complementary skills together and create something that truly helps the Indian economy. And that's how Google Pay came to be built on UPI. UPI launched somewhere in 2017, I forget, early 2017. Google Pay launched in September. And if you look at the curve of UPI, it's like sort of going like this, and then it just goes vertical. And it's been near vertical since then. And obviously, COVID helped massively with adoption, because at that point, there was no choice but to use this. But that's how sort of I got into it. And I realized the tremendously powerful impact that combining the best of finance and the best of technology can have on an entire ecosystem.
So look back and give us a sense of stock taking of the Next Billion Users initiative. So what has it been, so its legacy, if you will?
I'd like to believe like Google today works much better for the Next Billion Users and new people coming online than it did pre-2014, right? So, today, for example, if you think about it, when somebody buys a low-cost phone in India, at some point of time, it was really crap, right? It was just like really, really low standard. So we started at that level working with the Android team, with the hardware manufacturers, so that people could buy a $100 Android phone that was actually good quality. That would last them a couple of years. Then we worked up the stack. We said, what are the experiences? On search, we realized people were using Google very differently from how you and I use Google. People in villages in India would talk to their phones. And so Google spent a lot more effort in putting like local language voice recognition to be much better. And interestingly, that helped all of our voice recognition systems get better globally. Because guess what? People have accents, even if they're speaking in English, right? Similarly, we added Google Maps offline for Indonesia. That was the first country it launched in. Now today, like wherever you go in the world, people are using offline. YouTube offline was added for India. It launched first in India. So there was a set of these things. And then products like Google Pay, we launched Google Pay in India, then we brought it to Singapore, then we took it to 80 countries around the world. Not in the same depth as we can do in India or Singapore, but in most other countries, you can tap and pay using Google Pay, using credit cards. I think now I believe the product is called Google Wallet, that part of the product. But you can pay for transit, you can pay for other stuff. So I think I would love to believe that, my team and I left Google as well as our users who we're ultimately serving in a better position space than we were in 2014.
Right. Okay. So I'm going to play devil's advocate for a second. Whether it's your Next Billion User initiative or any other sort of track record of mobile payments in the last 7-10 years, lots of people are using mobile payments. Lots of people are doing it faster. Transactions are happening. That's all self-evident. But is it really clear that that has led to improvement in companies that are associated with payments into greater profitability? Is it evident that people who are using payments on a day-to-day basis, other than saying that my life is easier, they're actually seeing an improvement in their livelihood or income? What's your understanding?
Oh, without a doubt. There have been actually a number of studies done on this, particularly for the smaller merchants. The ability to take digital payments has improved their cash flow situation. It's made them more credit-worthy. So now merchants can get credit because they have a track record of credit. It's helped them get access to additional systems so they can buy from not just the local market, but they can look at supply chains, help them evolve on that. It's helped them think about their inventory. There have been multiple billion-dollar companies that have been built on top of the Indian ecosystem, right? And this is not just India. We've seen this happen in China. We saw this happen in Kenya in the past. And so, this is truly like the ability to make payments move faster, more efficiently at a lower cost in an economy is transformative. I'm sure some set of economists can measure like what impact it has had on GDP, but I think India doing digital payments at scale has probably been one of the big driving factors for the Indian people seeing a much better economy, much better system and infrastructure. I can tell you today, I meet tourists who come from India to Singapore, and they get confused because they're like, why can't I pay with my phone in all these places? Why do I have to take out cash? Like the inefficiency of it, right? So for certain, in terms of profitability for the ecosystem, and this is something that was very important to us at Google when we were there, is how does the whole ecosystem become profitable? And let me give you one example. Before doing loans on Google Pay, one of the large banks in India would take about 3 days to just process the loan for one of their existing customers. So this is an existing customer who has a bank, the bank understands their credit, and they're just trying to give them a loan for whatever they need, right? Working with Google Pay, we got it down to a couple of minutes, 3 screens, right? And so 3 days to 3 minutes is a transformative difference, right? Like number of people who started taking loans or availing of the same thing creates not only better opportunity for those people, but massive opportunity for the bank, right? Today, similarly, like fixed deposits in India can be done through products like Google Pay, and that again reaches many more people. Today, if you go into some of the smaller villages in India, you will find people don't have to think about where do they get cash or how do they borrow cash. I mean, these things have truly had a huge impact, and I think the government has had a massive role to play in it. The government distribution, the public support systems, welfare systems work through the same system. So, it's reaching more people. There's less loss in the process. So I think it's one of those things that, the rest of the world should actually closely see how it's worked. And it was actually an incredible partnership between government, industry, existing banks, new tech players, a set of people who have helped build the India stack, led by people like Nandan Nilekani, that have transformed how commerce is done in that space.
I want to talk about the rest of the world for a second. Southeast Asia, you mentioned a little bit about Indonesia, but just give us a sense of, the state of payments in this part of the world relative to the successes in China and India.
So I think this part of the world is still a little bit behind. There are different countries at different levels. Thailand has prompt pay, which is quite interesting. Indonesia has a bunch of payment products that are enabling it. I was on the board of Gojek and GoPay for a while. The kind of stuff GoPay allows users to do has been pretty transformative. But I think the missing ingredient has been the interoperable public goods layer that hasn't been yet created in many of these countries. And there are discussions that are happening. I'm not close to them anymore because I haven't been in that space for the last couple of years. But a lot of the governments were looking at what India had done, what Brazil had done. And they were starting to think how do we create similar infrastructures? Brazil is actually another great example, led by their central banker, who's very forward-thinking individual. They set up Pix. Now, Pix is turning out to be another huge success compared to UPI. I think in a couple of years, people will look at Pix as another great example. So I think Indonesia and others should look at Indonesia, Vietnam, Thailand, others should look at those systems. One of the interesting pieces is, this is what I find strange, is no government would allow physical infrastructure to get built without some central planning and some thinking. Why is that the case for digital infrastructure? Right? Governments and policymakers should be as forward-thinking and leaned in on digital infrastructure, because when they do that, that's when the economy takes off. We have great roads, we have great public transportation system. That's not what the industry can build. Those kinds of planning, the process has to be done in a much more thoughtful manner. So I feel like that's been my lowly humble opinion is that's been one thing that's been missing across a number of our markets in Southeast Asia.
Especially the example you gave about UPI being set up exactly at the time when the banks and sort of the tech companies were all coming together to figure out all the nuts and bolts of the digital highway of payments, if you will.
And part of it is also, you need somebody who's thinking not just about a particular company's P&L, but is thinking at a broader level about the economy. And that's what happened in India, what happened in Brazil. And even though there was a transition to make for a number of the existing incumbents in the markets, they, as well as the government and the policymakers, were forward-thinking enough to say, look, this is a transition we need to make because this gets us to a better end state, right? So rather than being stuck in a local maxima, they could go find another global maxima.
Correct. Domestic payments within a country is one thing. International payments cross-border has other layers of complications and regulation. How's it going there?
To be honest, I'm not an expert in that space. We started looking a little bit at it, but it seemed to be something where the banks are already pretty engaged on with SWIFT and other ways of looking at it. There are clear inefficiencies. Anyone who sent a SWIFT message knows that. But I've heard that there's lots of efforts looking at how to improve that and make that be much more efficient, effective, and sort of function at a much more scalable way.
Right, but related to that, what's your view on the whole blockchain and crypto in the world of payments?
So I'm a big, I would say I can see a role for blockchain in sort of the bank-to-bank settlement space, particularly internationally, maybe even in some other spaces. Blockchain has impact as a technology in other areas, supply chain, things like that, where you need a distributed set of trust creators, for want of a better word. I'm not a big believer in crypto for consumer payments. Not because of any personal religious belief, like I'm a technologist, I'll go wherever it is, but I don't think the regulators around the world are willing to live with the risk of all the potential nefarious uses of consumer crypto payments that we've seen happen already.
From ransomware to
terrorism, all this kind of stuff. So I think that makes it very hard for crypto on the consumer side. That's why I've never sort of felt like it's been an area where we'll see a lot of traction, because payment sits in this interesting space where it is regulated, but it's also something that has to be adopted by consumers. Just consumer adoption doesn't guarantee success. It has to work within the system. From all my conversations with regulators around the world, I'd be surprised if consumer crypto takes off.
Right. I mean, it's interesting. I mean, you see central banks sort of struggling between not being seen as anti-innovation, but at the same time being very guarded about the sanctity of cross-border payment or the risk of fraud and ransomware and so on. But the central banks are also trying to do their own digital currency initiatives, and we're seeing pilots everywhere.
So I'm a big believer in central bank digital currency, huge believer. In fact, when we were at Google, there was a bunch of open source efforts we were trying to encourage, along with Gates Foundation and others, where this again, I think, is a global public good. I wish, if I'd been at Google still, or I wish some tech company would just build an open source stack for every central bank. This doesn't need to be something, because the quality of technology matters here. And if somebody builds out a scalable central bank digital currency infrastructure, tech infrastructure, every central bank should adopt it, right? And if it's open source, everybody can look at it, contribute to it. It could be a very, very worthy cause. Central bank digital currency would be very, very interesting, because I think it marries the security and the regulations with some of the advantages that you can get from such scalable cryptocurrency.
When you scan the near term, say 3 to 5 year horizon, what else is there in the payment space? Or are we done innovating and this just gets refined, or there's
No, I think there's a huge amount left to innovate. I think first of all, the rest of the world is left, right? And there was again a effort that Google was working on with Gates Foundation called Moja. It was an open source infrastructure. It was essentially an open source piece of technology that any country could adopt and just build their own version of UPI. I know UPI itself, NPCI itself, is trying to take UPI and offer it to other countries. So I think there's a huge amount of innovation left where globally people can actually adopt, countries can adopt that kind of a system. And think about Africa. Every country, all the different currency systems, but having an infrastructure stack that really makes payments efficient could be transformative for economies in many places. It would bring many people into the financial fold, open up credit to them, help them build their financial histories. So just sort of formalize a lot of the finance that sort of today happens in that informal world, which also exposes people to risks.
Right.
So that's one area. I think there's a huge amount of impact on using AI to do better credit ratings, to be able to sift out like the good people, the good businesses that you really want to put money into from sort of the fraud that happens in the space. So I think that whole space has a lot of innovation left to do.
And on the security and trust side, I just read this article, I think earlier this week, that Apple discovered, very basic but rather, precarious sort of flaws in its, passcode using system, and how, people would just see other people using their passcode. And despite all these, thumbprint and iris scanners, that seemed to be sufficient for people to sort of get inside and steal a lot of money. So from a two-factor authentication to other sort of security features, I mean, do you think that, we have a secure payment system in the world, or there's still some innovations needed there?
Oh, absolutely. There's huge amounts of innovation needed. Look, there is never a secure system.
100% secure.
Because there's never a 100% secure system. Because as you are increasing your security, the bad actors are also increasing their level of technical sophistication. So it's always a race, right? And this is why, companies have to constantly keep innovating in that space. But has this got better? Yes, absolutely. And you look at the track record of human history, payments and digital has only gotten more and more secure over time, right? There was a time when people stored cash under their mattresses, right? And I would say that security was based on a stick. Somebody would come with a stick and take your money, right? And then today we've got to a point where, today I can let my old parents use payments, and they use DBS cards and their app everywhere, and I feel very comfortable that yes, they may not be fully aware of all of technology, but they're sufficiently protected. And I think that'll just keep getting better as you get multi-factor authentication. There's a huge step forward that the tech platforms have done now. Microsoft, Apple, Google, all working together, called passkeys. Passkeys are a massive leap on top over passwords. And so as passkeys get adopted more broadly, it'll get better and better. And some of this is only possible because people are now starting to carry mobile phones, and they have mobile phones that have biometric built into them and are more capable, right? You have NFC chips. So I think it's a story where today I tell people, look, anything you can do individually to secure yourself, you can trust that the bank or the tech company that you're using, any of these tech companies, is going to do about 1,000 times better. So it's best to trust that there are systems that are working at scale.
So Caeser, we're recording this at the headquarters of DBS. One floor below, there are a whole bunch of ATM machines. If you and I come back here 10 years from now, will there be any ATM machines left?
I hope not.
No cash?
I hope not. I hope absolutely not. Because I think cash was the physical aspect of cash. There was a time when humanity exchanged tokens, right? We exchanged rocks or shiny bits of metal. And now we've evolved, but we're still exchanging things. The point of digital, the point that we all have mobile phones, means I should just be able to pay you when I'm sitting next to you. We already can do that in Singapore. Using a phone number, I can just pay now money to you, right? In India, I can use a VPA or a UPI handle and pay anyone, right? China, that's true for, depending on the ecosystem you're on. That should work in every place. It's shocking to me every time I go back to the US that it's still not happened in the US, right? And that has to happen across the world. But I hope at some point in time we can get rid of these things, green pieces of paper or, around the world. But
what happens if there's a cyber attack or a grid failure of electricity?
You will have to have systems in those baked in that work, right? And this is not a technical issue. Technically, you can solve for that. You can have
offline payments.
You can have offline payments. You can have wallets that stay on your phone. So technically, you can solve these things. It's the same way as, today, for example, my daughter, who's 15, when we land in any holiday anywhere, her first question is there Wi-Fi? And how do I get online? Because to her, a world where there is no connectivity doesn't make sense. And so I think we are heading in that direction gradually. It'll take time. It'll not be an easy transition. There'll be many of us. There'll be little bits of like, even now we live in Singapore and we have perfect infrastructure. But a few weeks back, like one of our transformers in our building blew up and our apartment complex lost power for 3 or 4 hours. Happens, right? But it happens increasingly less and less and less. Mm-hmm. And we'll get to a point where there is enough resiliency in any kind of public infrastructure that these things will work.
Okay. Tell us about Arta.
So Arta is a Singapore and a US dual headquartered company. We started 2 years back. It was started, I have 8 co-founders. It was basically the leadership team from Google Pay. And we were at Google leading all Google Pay, Google Finance, all payment infrastructure, any commercial dollar that went through Google. And we decided to start Arta based on a problem that we faced in our own lives. As we were sort of progressing along Google, none of us come from rich families. We're all professionals. We all sort of worked our way, studied hard, and got there. And we kind of didn't naturally know a lot about the nuances of money or all these secret superpowers that the rich had, right? And as we started progressing, at some point, some of us started using private banks and started being exposed to maybe some other friend who had just taken a company public and had their own family office. And we would hear about these amazing financial superpowers, right? And few thoughts came to mind. Wow, these are powerful, right? Rather than just buying ETFs and putting your money in a robo-advisor and tracking everything in my spreadsheet, what if I actually could get access to a private bank and I could, get access to alternative assets and think about my public markets exposure in a really sophisticated way? Get advice in the right places, think about tax in the US context, tax is very important, think about estate planning, all of that kind of stuff. But then we realized 2 things. One was, all our experiences were really old school. There was no technology. I mean, we were making payments, we were booking cars, online, using our phone, ordering food. But when it came to money and our wealth,
signing actual forms,
yes. And scanning, and somebody calling us back and saying your signature doesn't match.
Oh yes,
right. And we were like, this can be changed. And the second thought, the third thought that occurred was, first powerful, second it's old school, and third was we should have had this 10 years back in our lives. Like, how transformative would this have been if instead of getting into private banking when we were in our 40s, if we could start thinking of this in our 30s? Like, the one secret of finance we all know is compounding. Yeah. The earlier you get started on stuff, the better it is, right? And so we set out to build a new kind of private bank from scratch that was built to be digital forward from the get-go. That could be built for professionals, where somebody, once they get started in their professional career, maybe they're in their early 30s, mid-30s, whatever, whenever people start feeling like they are on the right track, they're accumulating money, where they could start availing of the same financial superpowers that the ultra-rich had. So Arta gives people access to alternative assets, private equity, venture capital, private credit, same high quality, well-diligenced funds that you would get when you had $25, $30, $50 million to individuals with hundreds of thousands to even a couple of $1 million in net worth. We help people think about their public markets exposure in a highly structured way, but also do that in a completely automated manner, right? So that your trades can happen all the time. So there are things that are running that are looking at what your public markets exposure is doing even when people are sleeping. Sort of the way you would think about it if you bought a tech approach to doing these things. We're helping people get started with, in the US, tax and estate planning and insurance way earlier in their lives. So that rather than waiting till they're in their 50s, by their 30s, they're actually already set up, sort of like the Rockefellers are set up, right? So we launched in the US in November. And we're SEC registered investment advisor, so it's a highly regulated space. We just got the in-principle approval in Singapore to launch, so thank you so much. We are very grateful, and in the next couple of months, we'll open up in Singapore also to a certain set of segments. And then we're now starting to talk to a bunch of our partner banks and friends in the ecosystem about how we can take some of the technology we've built, experiences we've built, and be able to also help them serve their customers. So that's where Arta is today.
So walk me through the app that I haven't had the pleasure of trying out. I'd like to. I'm looking forward to it.
Couple of months.
Yes. The experience that a user would have when they use this app versus, say, a typical day-to-day interaction with a private bank.
Yeah. So typically today, if you were working with a private bank, you would have a private banker, right? And you would go through the private banker for everything, right? You say, I want alternative access. They'll send you a bunch of slide decks. You look at them. If you have questions, they'll pull in an expert who you can talk to. If you want to think about your public markets, they'll ask you risk tolerance, all of this kind of stuff. They'll probably suggest like, okay, you should put some money into, this cash-like thing, some money into this thing, into some set of, investment products, and some mutual funds, some ETFs, and they'll construct a portfolio for you. Today, Arta lets you do all of that on the product itself. When you want to talk to an expert, you absolutely can, right? But you don't have to go through a private banker to access everything. You can look at all the funds yourself on your desktop, on your phone. We have web, we have Android, we have iOS. You can sit down with your spouse and decide, what makes most sense for you. If you want to talk to somebody who can help you plan an overall allocation, of course you can talk to them.
So there is a phone number.
Of course, there's a phone number. There are video. It's better than a phone number. Today we do video.
I see.
So you can set up a video time with anyone and be able to talk. But more importantly, it also helps educate the user a lot. So rather than just delegating all your trust and your expertise to someone else, the professional of today actually wants to know. Many of these people are doing incredibly well in their careers, right? It's just that they haven't been focused on finance per se. So being able to equip them with the right content, the right education, the right tools actually puts more power in their hands. And of course, they are smart enough to ask the experts when they need to, but it gives them access, it gives them that level of control, and it gives them transparency, right? Today, you have to kind of trust one person, and in many cases that works, but in this case, you have the numbers, you have the data, and you can make your own decisions.
So there are, very fancy hedge funds with very high threshold of entry. You have to put in a huge amount of money, and some of them are big into sort of quantitative strategies. I always wonder that, does it have to be that you need hundreds and hundreds of thousands of dollars to access those quantitative strategies? So does your tech stack allow you to replicate some of those very high-end stuff at a
Absolutely, absolutely, and I'm glad. Thanks for bringing that up, because being able to drive access is a core part of what we do. It's been true for our team, and I wouldn't say just me. I've worked with these people for 15 years, from Chromebooks to next billion users to what we're doing with Arta, of being able to bring greater access to more people using technology. And so here, what we do is, whether it's alternative assets or whether it's public market strategies, very sophisticated ones like quant strategies, we bring down the access level to a much smaller amount. So you can invest in a very high quality PE fund, one of the top 5, with $25,000 versus $1 million that a private bank would do, right? Suddenly it becomes approachable for many, many, many more professionals. Similarly, quant strategies, one of our strategies is a very well-proven, established strategy called the min volatility algorithm that has been proven in academia over time. Typically, you would see hedge funds doing it, and they lever up and create return out of that. We now let people do it in Arta for $25,000. But more importantly, we let them customize it. So instead of just doing, this is something even the hedge funds won't do. You might be as rich as you want, but you can't go to a hedge fund and say, look, I work in tech. I want my strategy not to have enough tech because I want more diversification. But when you build things with tech, with deep technology and infrastructure, you can do that. So today, for our defensive growth strategy, someone can come, pick a risk level, say, I want to be more in tech, less in tech, more in pharma, less in pharma, whatever you care, and we will execute that for you, and obviously at a much lower price. So there are other strategies, there's a very interesting strategy that we're about to launch called direct indexing in the US. So in the US, taxes make a big difference, but interestingly, if instead of buying, say, the S&P 500 ETF, if you buy the individual components of that ETF and then you buy and sell them in a systematic, structured manner, you can generate tax losses. Now, these tax losses can be written off against capital gains that you have that year, or they could be carried forward, right? And this kind of structure was always available to the ultra wealthy. But today we can do that for $25,000 for a whole bunch of Americans. So suddenly making it available to many, many more people to be able to do it at scale. When we come to Singapore, we're thinking about what are the specific things that our infrastructure can enable Singaporeans to do. And one of these we found is often people want to bet on long-term themes. Somebody has insight into look, I think the population is aging, and services and companies that cater to this aging population is a good theme that I want to invest in for the long run. So we will enable Singaporean users to do that super simply in a structured, systematic manner where they just pick that theme, are able to invest in it, we keep it rebalanced. It's almost as if they were running their own index.
Right. Now, there are rich countries and then there are developing countries, and I understand that there is a lot of wealth in the US and Singapore, which sort of is a great sort of starting point for your initiative. Do you see, even for developing countries where people are not as wealthy, that there is a role for financial literacy and financial planning coming together through your app?
Oh, absolutely, absolutely. I think that's actually one of the things that's most exciting is the amount of young professionals that are in countries all over. And the young professionals today are a lot more like each other around the world because they're on the same products. They're all on, Instagram and TikTok, and they're seeing the same, they dress the same, they talk the same, they follow the same trends. And so we think there's a whole class of these people who are, as they progress in their lives, as their countries advance, Bangladesh has been a huge economic success over the last 10 years in terms of growth. And can you think of the number of professionals who are there? It may not be the millions that you'll see in the US or China or India, but there is definitely a class of professionals who are building the economy, who are building great businesses, who will want this kind of sophisticated service. So, one of our goals is in the long run, over the next 10, 20 years, be able to take what we've built and bring it to every country in the world. There's no reason if a country is developing, they will have professionals who are helping drive it. Today's wealth creation is not about the people who are born rich.
Right.
Today's wealth creation is all about people who are creating more value for the ecosystem, for the system, for their countries at large, and partaking of that. So we want to serve as many of them. Some we'll serve directly. Some will go and partner with a bank in that country to serve indirectly using our technologies.
So if not the next billion, but the next 100 million.
I would hope to get to the next billion at some point of time. From a humanity perspective, there's no reason why a lot of the technologies we've had and we've built should not be available to everyone. Today, there are regulatory constraints. Today, Arta is available only to accredited investors because, regulators feel some of these products are too sophisticated, and I respect that. But I would also argue that over time, working together with the regulators, if we are able to show and help them understand that some of these products, not all, maybe some of these products, could benefit everyone, independent of how much wealth they have, there's no reason why this should not be available to somebody with $10,000, or 10,000 rupees, right? When you use Google search today, or Gmail, it doesn't matter whether you're a PhD like you, or whether you're a kid in Nigeria. Why should it be that way for finance, right? So that's my ultimate goal. I want to take what we've built and make them available to every single person in the world at some point in time.
Love it. That's a great note to, I think, conclude our chat. Caeser, thank you so much for your time and insights.
Absolutely, Timur. Thank you so much. Pleasure being here with you.
Great to have you. And thanks to our listeners as well. Kopi Time was produced by Ken Delbridge, Violet Lee, and Daisy Sharma provided additional assistance. It is for information only and does not constitute any investment advice. All 116 episodes of the podcast are available on YouTube and all major podcast platforms, including Apple, Google, and Spotify. As for our research publications and webinars, you can find them all by Googling DBS Research Library. Have a great day.